my long-term forecast, I've been saying this for a few years, is that ultimately we are going to see a global bust next year because a big part of it being because the Fed stays too long on the tight side, central banks around the world stay too long on the tight side, ECB, et cetera. And you combine that with the massive leverage that we have this cycle, unlike any time in history. And that's just not a good combination. A huge policy error combined with massive leverage. And I say leverage is both the debt, the 300 trillion plus of debt in the world, combined with quadrillions in notional value of derivatives. I think that combined with the policy error does not put you in very good stead next year.
With about 50 years of experience in the financial markets, David Hunter can be described as an expert at what he does. He is a renowned contrarian macro strategist who has spent decades analyzing macro factors and their impact on the global economy. Hunter has been known to make price predictions on various assets, including equities, bonds, and commodities like gold and silver. As a contrarian strategist, his predictions often differ from the general consensus at any given period, and it's no different this time. According to Hunter, who currently holds the position of chief macro strategist at Contrarian Macro Advisors, the global economy is on the precipice of a nasty bust that would have the duration of a recession, but the intensity of a depression. Hunter believes this period of intense economic decline, which could last for as long as 2 years, will have a lot of similarities with the 2008 global financial crisis. It will ripple through the global banking industry and take down several regional banks from China to Japan, Europe, and possibly the United States. As it happened during the GFC, Hunter is also certain that one of the main catalysts of the bust will be falling housing prices and a rising number of borrowers being unable to repay their loans in the high interest rate environment. A real estate crisis will be the proximate cause of the crisis, Hunter reckons, but that and every other direct cause can be directly linked to the recent activities of central banks, which continue to resolve to hold rates higher for longer to bring down inflation. But that's as far as similarities between the bust and the 2008 financial crisis go. One huge difference, Hunter points out, is the amount of leverage in the system now compared to 15 years ago. According to the latest report from the International Monetary Fund, global debt has more than doubled since the global financial crisis, going from about $142 trillion in 2008 to $307 trillion in the second quarter of 2023. According to Hunter, the immense leverage in the global financial system will make the bust even more depressing and destructive. We will now bring you clips from Hunter's recent interview with SOAR Financially. Make sure you stick around to the end of the video as he also discusses a near-term market melt-up that could take gold to $3,000 and a decade-long commodity supercycle that could take the leading precious metal to over $20,000 per ounce. Please share and like this video, and don't forget to drop your comments and observations below. Also, ensure you subscribe to the channel and turn on the notifications bell for more videos. Thanks for watching.
What you find, I've been a Fed watcher for 50 years, and what you find every cycle is the Fed is backward looking. They're looking at data that by definition is backward looking. And they're looking for, they're focused on today. Obviously, they factor in what they expect and their dot plotted, et cetera, et cetera. But ultimately, I think they're so focused on the present, and the market are focused on the future. And I think the future continues to point down. Yeah, I define a global bust as something bigger than a recession, but at the speed of a recession, so 12 to 18 months. It's not like the Great Depression that was a decade long. It's something where it'll feel like a depression, look like a depression in a lot of ways, but it's, the financial part of it happens very quickly. I think we almost got to a global bust in 2008-9, and the policymakers pulled us back from the cliff just in time. If you remember, GE Credit almost went under. The commercial paper market was frozen. The whole AIG thing. That week we were very close to going over the edge, but they stopped it in time. This time around, I think the risks are higher, much higher. The leverage in the system's much higher, and I think it can happen much faster than our policymakers are accustomed to moving. I mean, 2020, they moved pretty quickly and it still took them a month or more to kind of figure things out. So um, this time, I just think things could unravel very quickly. Now, a global bust is a bad economy, but the biggest part of it is the financial unwind. Um, and I think it's probably more centered overseas, particularly Europe. But I think you'll see some major banks go under. This time around. It won't be U.S. centered. You know, we're a small world, and there's a lot of counterparty risk. So I can't say that we won't see a big bank here go under. But I think most of it's overseas. Normally, you would, obviously, in an election year, assume that you wouldn't see something like this. That they'd engineer, recovery. That the administration in power would not want to see this. I just think this is global and it's beyond their control. Unlike some people out there that think the Fed is engineering this, the administration, trying to bring us down, et cetera. I just think this is not deliberate, and I think the Fed is making a big mistake. They're focused on the problem of inflation, but I don't think they really understand leads and lags. So I think next year it would be a highly unusual thing to see a global bust in an election year, but I think it's beyond their control. It's not something they want. It's something they're going to try to avoid, but I think this is going to happen fast. As we know, a lot of these things, trouble, you get there kind of gradually and then all at once. And I think the all at once is coming in the next, 6 to 9 months.
Before the bust begins, Hunter predicts a brief recovery period for asset prices sometime between the end of the year and early 2024. According to the renowned macro analyst, the melt-up will come when the Fed finally signals that it's done raising rates and close to announcing cuts or even going completely dovish. When that happens, even if it's only a small hint of better days for the markets, Hunter predicts that the hundreds of billions of dollars that are currently sitting on the sidelines will be poured into the markets, taking gold to a new all-time high of $3,000 and the S&P above $6,000. Let's get back to the interview.
Are we done raising rates here?
I think we're probably done. I'm not sure it matters whether they raise another quarter in November or not. But I think, as I say, the economy is probably going to be winding down between now and then and beyond. So I suspect they may be done. I think they're comfortable with the higher for longer and not necessarily raising from here. What I do say is that I'm calling for a melt up before the bust. A final blow off move in the market that could take the S&P to 6 to 7,000 in the next 3 to 6 months. Obviously, that's unprecedented. That's a big move. There are reasons for it, but if we do see, if I'm right about that, and we see something over 6,000 on the S&P, I think there's a very good chance that Powell comes back and hikes rates again, even though they may think they're done now, or as we move towards the November meeting, think they're done. You could find a few months from now them saying, we just can't let this thing run away. Risks are going crazy, and they could come back and hike right on the edge of a bust. I mean, the market can go, people don't understand. A melt up does not mean the economy is getting better. A melt up may be because people are anticipating the Fed tightening cycle's over. So they might focus, particularly given Bill Dudley's thesis about, the Fed having to look at the stock market and get it down. It blew up in their face, but I don't think Powell has abandoned that. And so I think if we're up over 6,000, that's going to be haunting him and saying, I've got to get the market down, and he may almost ignore the economy at the expense of the market. And, if we're ever closer to a global bust, that may be the straw that breaks the camel's back. What I have been saying is that the melt up, usually when you move towards, and this will be a secular top, I think, I argue that the secular bull market started in 1982. That's kind of the start of the whole disinflationary cycle that drove PE multiples much higher. So my argument is that that we're moving towards a secular top that may stand for decades. However, mean, normally, if you're in that last stage, the market gets narrower and narrower. I think this melt up's probably going to be a broadening out of the market. So I think you'll see tech continue to play, but I also think value will play. Big cap, small cap will both play. Growth and value will both play. Tech as well as industrial cyclicals and commodities, and the miners I think will play. The things that will probably underperform, surprisingly, I think we're at the end of a rally in oil. I don't think there's a big move coming in oil. I think it'll go the other way. I think energy rolls over here, energy stocks, and I think some of the defensive areas like the utilities and consumer staples will probably underperform.
According to Hunter, the market melt-up and global bust will be a precursor to the real issue, a 1930s Great Depression-style global depression, which he says will occur at the start of the next decade. Hunter predicts that this depression will resemble the Great Depression in intensity and duration, lasting several years in the 2030s. He explains that the depression will be caused by central banks printing money recklessly to save banks in the markets during the bust. For example, Hunter is predicting that starting from 2025, the Federal Reserve's balance sheet will grow by over $20 trillion, from the current $8 trillion to over $30 trillion in only a couple of years. Other central banks will follow suit to save their respective economies, which will cause sky-high inflation, consumer and monetary inflation. By the end of this decade, Hunter estimates that we will be looking at new highs in inflation, higher than the inflation rate in the early 80s. With inflation above 20%, Hunter is predicting that gold will be around $20,000 per ounce, silver over $400, and oil over $500 per barrel. According to the renowned macro strategist, that will be the moment we see a true commodity supercycle, as everyone will be seeking shelter in gold, silver, and other commodities. Do you think gold can climb as high as $20,000 per ounce within the next 7 years if central banks continue printing and inflation gets completely out of hand? Please share your thoughts on Hunter's predictions in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.